bring in Steve Wesley. He's the founder of Wesley Group, former Tesla board member. Steve, always good to have you. Just give me your thoughts about the X and the S and saying goodbye to them and the ramp up in, what Musk says will be at some point a million robots a year coming off the lines.
Look, it's a tough quarter for Tesla. First year of declining revenues down 3%. Second year of declining auto sales down 9%. Profit down 46%. I mean, the one thing that's increasing here is competition. BYD outsold Tesla for the first time in the EV space. And, Volkswagen, Hyundai, these other firms are coming on with lower cost models. There's more competition. Saving grace, energy division grew 27%. All of the world's utilities need more energy to power this AI data center revolution, and Tesla's filling in that gap right now. But the big story, Tesla's ending Model S and X, doubling down on Optimus. They're out to prove they're a tech company. Let's see if they can do it.
Yeah, well, you don't seem to have gotten the memo, Steve, that they're not a car company. Come on, why are you focused on things like declining auto sales and year-over-year numbers?
Well, until they can get this Optimus into the market, get more full self-driving vehicle regulatory approvals, they've got to tell that auto story. But I think they're starting to do that. And again, their energy division showing dramatic growth. Again, everybody's talking about who's going to power energy in the future, where are the utilities going to go. Right now, Tesla's energy division is killing it with their Gigapack and their energy block. So this is a big deal. But they're going to have to show they can get humanoid robots into the market, I think, by the tail end of this year, and that's not going to be easy.
No, that will not be easy at all. I mean, when I sat down with Musk, now it's a while ago already, and targets change. He was talking about 2030 in terms of really mass production of the robots. Given your time as a board member there, I'm just curious, broadly speaking, do you think they will be able to meet these goals of becoming a major manufacturer of robots that can do any number of different tasks?
Look, I think what they've done with the Optimus robots is impressive. And they've got plans to produce the Gen 3 by the end of this year, sell a lot at scale at 2027. And it's hard to bet against Tesla, but there's huge competition from well-funded companies. We track a lot of these at our firm, like Figure AI, heavy backing with NVIDIA. They're very serious. Boston Dynamics, Unitree with strong support from China and subsidized product. So this isn't going to be easy. But I think Elon's going to show the world he may still have the Midas touch with that IPO at SpaceX, but this one's going to be a tall order. We'll see if he can do it.
Steve, the stock has underperformed the S&P not just over 1 year, but over 5 years. Some blame that on his foray into politics. There's been some Yale studies recently trying to count the number of cars potentially that it cost the company in deliveries. Do you think people will want to buy a Musk robot too?
Yeah. Well, look, most of the corporate executives in the United States largely stay out of politics. That's probably a smart thing. Focus pays off well. They've really got to kick this full self-driving thing into gear. They only have approval in 2 cities now. Waymo is in 6 cities, going to 12, as many as 20 by the end of the year, including New York, London, Tokyo. So focus would be a good thing. They've got a ways to go to catch up on full self-driving. They've got to prove their mettle and Optimus robots. This is not going to be easy, but a lot of what he's done is not easy. He's managed to prove the naysayers wrong. 2026 is going to be an interesting year.
Tesla's struggles in Europe, declining sales, increased competition, and the rise of BYD Tesla, the world-renowned electric vehicle (EV) maker, is facing growing challenges in Europe, with sales plummeting for the 13th consecutive month in January. The company's new car registrations fell by 17% year-on-year, reaching just 8,075 vehicles, signaling a troubling trend for Elon Musk's company in one of its most important markets. This decline in sales comes as Tesla grapples with fierce competition and a tarnished reputation in the European market. Meanwhile, Chinese EV giant BYD continues its remarkable rise, securing more market share and posing a direct challenge to Tesla's dominance. Tesla's struggling market share in Europe, according to data from the European Automobile Manufacturers Association, ACEA, Tesla's market share across the European Union, Britain, Switzerland, Norway, and Iceland dropped to just 0.8% in January 2026, down from 1% in the same month the previous year. Despite being a trailblazer in the EV industry, Tesla is facing mounting difficulties as it navigates a more competitive and diverse European market. Rico Luhmann, a senior sector economist for transport and logistics at ING, explained that Tesla's start to 2026 has been very weak in Europe, highlighting how consumers now have much more choice. With the influx of affordable electric vehicles from both legacy automakers and emerging Chinese brands, Luhmann attributed Tesla's challenges to a combination of factors, including a lack of new vehicle models and the company's heavy focus on autonomous driving technology rather than expanding its range of mass-market vehicles. One of the other contributing factors to Tesla's decline in Europe is the increasing availability of used Teslas. The first generation of Tesla models, which have been on the market for 4 to 6 years, are being remarketed in large numbers, driving down second-hand prices and further reducing the appeal of new Tesla vehicles. The rise of BYD and other Chinese competitors. While Tesla's sales are shrinking, Chinese automaker BYD has seen rapid growth across Europe. In January 2026, BYD's new car registrations surged by a remarkable 165% compared to the previous year, reaching 1,842 vehicles. This increase has enabled BYD to more than double its market share in the region, rising to 1.9%, up from just 0.7% in January 2025. The company's aggressive expansion into Europe has made it one of the most formidable challengers to Tesla in the EV space. BYD's success can be attributed to several factors. The company benefits from a significant cost advantage, thanks to China's lower labor costs, which allows it to offer vehicles at more competitive prices. This cost edge makes it difficult for Western automakers like Tesla to compete on price alone. Additionally, BYD's growing presence in Europe has been bolstered by a wide range of affordable EVs, making it a more attractive option for European consumers seeking value and variety. Michael Field, chief equity strategist at Morningstar, noted that BYD and other Chinese automakers have a structural cost advantage that is hard to overcome. He predicts that even 5 years from now, European manufacturers and Tesla will struggle to close the gap in terms of labor and production costs. However, Field also pointed out that European automakers, including Tesla, are learning and adapting, gradually narrowing the cost difference by introducing new models at lower price points. Tesla's reputation and leadership challenges. Another factor affecting Tesla's performance in Europe is the damage to its reputation, particularly in light of CEO Elon Musk's public persona and his association with former U.S. President Donald Trump. Musk's political involvement, including his financial contributions to Trump's re-election campaign, and his close ties with the administration, sparked protests at Tesla dealerships across Europe. While Musk's relationship with Trump eventually soared, the controversy left a lasting impact on the company's image in Europe, particularly among consumers who are sensitive to political affiliations and public rhetoric. Tesla's failure to deliver new models and its focus on high-tech innovations like autonomous driving have left many European consumers looking elsewhere for their next EV. While Tesla remains a popular brand globally, it now faces stiffer competition from both established European automakers like Volkswagen and Renault, as well as aggressive new entrants like BYD. A competitive EV landscape in Europe. The European EV market is becoming increasingly diverse, with consumers enjoying more options than ever before. In January 2026, sales of petrol cars fell by about 26% year-on-year, while electric vehicles, both battery, electric and plug-in hybrid, saw significant growth. Battery, electric cars, in particular, grew by nearly 14% and plug-in hybrids saw a 32% increase, further underscoring the shift toward EVs. Tesla's declining market share is occurring in a broader context of EV growth, as European automakers ramp up their electric offerings to meet growing demand. Companies like BYD are capitalizing on the demand for affordable and efficient electric vehicles, while traditional automakers are shifting their focus toward electrification to compete with rising Chinese influence in the market. Conclusion: Tesla's struggles in Europe are becoming more pronounced as the company faces fierce competition from Chinese automakers like BYD and a growing array of European EV options. While Tesla remains a key player in the global EV market, its market share in Europe is shrinking, and its ability to regain ground will depend on how quickly it can adapt to the evolving landscape of affordable EVs and improve its image in the region. As the EV market becomes more crowded and competitive, Tesla will need to refocus its efforts on expanding its range of vehicles, delivering new models, and addressing the reputational issues stemming from its CEO's public controversies. CED's The Nummy. The company's performance in Europe will be a critical indicator of its ability to maintain its leadership position in the global electric vehicle market.